The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Friday morning. We got non-farm payrolls and a decent number, and could be a little bit of a Goldilocks scenario in terms of a cooling wage growth at the same time as an unemployment rate that's dropping to 3.5%. If you told us yesterday, if you told anybody yesterday, hey, the unemployment rate's going to drop to 3.5% on the non-farm payroll tomorrow morning, what's the market going to do? I don't think you'd say that it was going to jump up 40 or 50 points, but there's a lot in that report this morning. We'll get into it nonetheless. Markets accelerating higher, up to above 38.70. We'll see if it holds. We got about 23 minutes until the opening bell. NASDAQ 100, you catch a pop up about 100 points right now. That's a solid 0.9%. You have the Dow up a full percentage point right now, up 325, and the Russell up by 21 points at 1783. In the context of everything, though, folks, we're only just getting back to where we were yesterday morning. This is not some life-changing event in the markets. All we did was get back what we did yesterday, and yesterday we got the ADP private payrolls, which were a beat. So we have ADP private payrolls being a beat. We have unemployment rate at 3.5%, but we got wage growth, I believe, at 0.3%. We'll get into the numbers, but wage growth, keeping your eye on inflationary tendencies in that data. Crude this morning up by $1.50. We're trading above $75. Gold contract, we're up about $12 this morning. We got some action in currencies. We're going to jump over to them in a moment. And as you'd expect, we get some action in notes and bonds. A little bit of higher price, lower yield. On the 10-year, up by about 9 ticks. Again, though, just back to where we were yesterday morning. So no breakaway, huge movement. And the 30-year, up about 6 ticks. We jump over to the dollar index. DXY pulls back from the strength we had. Now, again, folks, even when I got off the air, okay, this is right where we were trading at yesterday at 10 in the morning when I got off the air, even after we digested the ADP number. Okay, quite a pullback from where we were overnight in the opening bell, 105.63 I have for a high print at about 7 a.m. this morning. You give up some of that gain, and basically you're technically flat right now in the session on the dollar index at 105.04. Let's just jump around to some of the other currencies real quick. Euro US dollar, as you'd expect, a little bit of a pop to 105.30 right now. We jump over to the dollar yen. Dollar yen right now, a little bit of volatility as well with the dollar yen below 134 at 133.66. We jump over to the VIX. Volatility index, 22, we'll call it, 21.97 right now in the volatility index. All right, let's get into the numbers. And there's a couple headlines. Dow futures gain after jobs report shows lighter wage gains than expected. So that's the headline here, man. But boy, if you look at it, there's a lot of volatility in wage gains, folks. And what I'll say is that the unemployment rate's at 3.5%. We got to get a hold of inflation. And I'm not sure that this is going to be the holy grail. It's a good report when it comes to a Goldilocks landing in terms of inflationary tendencies dissipating at the same time as the economy remaining healthy. Can't deny that the economy remains healthy when we're adding 223,000 jobs and we're looking at a number that's 3.5% unemployment. This thing was scrolling the whole time. I had it down here. We'll check in on that in a moment as there's a few tidbits on the live stream going on for Bloomberg. But when you get over to the numbers, I had the numbers, but it's just scrolling away. Headline number, 223,000 jobs, okay? Market was looking for about 203 was the number, but they added 223,000 jobs. Market was looking for about 200. Wages grew at 0.3%. The market was looking for 0.4%. Folks, there's so much variance that goes in. If you're telling me that this is the Messiah that everyone's been waiting for, okay? I mean, how about giving it to us in 2 decimal points, too? That's the other thing that I always think about, right? In the world of data being so important, in the world of this being a huge reaction to the market, tell me the 2 data points, please. Because, you know, you can round up and you can round down. What if the estimate was 0.36% and it came in at 0.34%? And they decide to round down on the 0.34 and they decide to round up on the 0.36 expected. I don't know. But when you're just dealing with 1 percentage point, 1 decimal point versus 2, you're getting a huge reaction. And you're getting a number that's still seeing wages, folks. Just to put it in context, last month, wages were growing at an annualized rate last month in December at 3.6%. The market was estimating 4.8. It's 30 days. I'd be careful to read too much into anything that's going on. We have a lot of data to go, folks. 3.5% is a heck of a number. But I don't know if that gets us out of the woods in terms of inflation, man. You know, we'll see. There's a lot of data to come down the line. That's an important one. Okay, wages definitely translate into what we're talking about in terms of prices. But it's not the same data. And there's a lot of weirdness going on in terms of how data translates across the board to everything going on. We saw the pockets of the economy yesterday in terms of leisure and hospitality. Leisure and hospitality year over year, I think it was like a 10% number, wages. Okay, and year over year across the whole economy, you're still talking about 7% wages yesterday on the ADP number. So the day is young, as our man Basil Chapman says. We're getting a lift to start things off, up about 33 points. NASDAQ up 75. You get the Dow up 300. Let's jump around to what else we have going on. Let's check out some of the big stocks, see how they're trading. You got Apple right now, up about $1. Yeah, up about $1. Closed yesterday at 125. We're trading at 125.82. Jump over to Amazon shares. Amazon up about 50 cents right now. You jump over to Microsoft, quite a day to the downside, quite a few days, man. Microsoft on Tuesday was trading at 245. Just like that, we closed it out at 220 yesterday. We're trading at 223.65. Google shares this morning, there's a pop for you. You're up about, same thing, 70 cents. We were above 88 on Google. Tesla's its own animal going on, folks. It just does not stop. Look at this. So Tesla, we get the headline pulled up. Tesla now over 40% cheaper in China than the U.S. as prices cut again. The Model Y starts at 43% less than the U.S. model, and the Model 3 is 30% cheaper. Yeah, they have some real issues, man, going on. The starting price for Tesla's locally built Model Y, okay, dropped 10% to a new low. That's 37,000 U.S. You're talking about 259,900 won. 43% less than the base model in the U.S. So they have some real issues going on with China, man. They also lowered the price of the Model 3 by 14%. That's about 30% cheaper. They've already cut prices in October as China's mass market and premium EV segments become increasingly crowded. Right? Kevin Hincks was talking about this a little bit yesterday as well. I think he was. Maybe it was a couple days ago. Competition everywhere in EV right now. Signs of deteriorating prospects for Tesla in China, and CEO Elon Musk's preoccupation with Twitter, have contributed to the stock tanking. Yeah, down another 8%. Is that what you had, man? I think a lot of people have been looking for a low on this one, man, but be careful because every day it seems like you wake up, man, Tesla's down another 8%, and there you go. We're going to open today at about 102. The previous low was 104, and that is quite a chart, folks. When you look at September 21st, you were trading at above 300, and you're going to be trading essentially under $100 potentially on the open. And that is when we have the market, folks, accelerating higher. It doesn't matter, man. Tesla's its own animal. Don't listen to Elon's tweets when he tells you that this is about the Fed, that this is about the market. Things have changed. Everything has changed for Tesla, folks, okay? That's the thing you want to consider. You want to buy Tesla, you're looking for a bargain, you might get one, okay? But you factor in that everything has changed. That brand has changed. Their leadership in EVs has changed. What's going on in China has changed. Not easy to get back that brand appeal when it just, has tanked pretty hard. All right, folks, stay tuned. We'll be coming back after the break. We'll take a look at some of those non-farm payroll numbers as well. S&P's up by 36. It's Friday. Stay tuned, folks. I'll be right back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
And welcome back, folks. We have the S&Ps right now. Hold on to most of those gains, but we gave up slightly. You're talking about 10 to 15 points off of the spike high of just above 38.75. You see that acceleration coming off 38.20 on the jobs numbers. Getting into some of the data, just scrolling through the live feed on Bloomberg. What do you have? December average hourly earnings. So year over year, it was 4.6%. The estimate was 5. We just talked about the month over month. It was 0.3 versus 0.4. Average hourly work week, 34.3 hours. The estimate was 34.4. Manufacturing payrolls rose in December. And you have the number that's the headline at 220,000 month over month. They have the estimate at 183. Some put the estimate at about 200. How about it's the 9th straight beat? The 9th straight beat. Is that how it usually goes, man? Now, there's some interesting takes. Interesting, such an interesting word, man. Interesting can mean so many things. The dip in unemployment we talked about, 3.5%, a bit surprising, right? Given that the labor force participation rate actually increased. So you have the labor force participation rate increasing at the same time that we have the unemployment rate dropping. You have more folks joining the labor market, but that did not push the jobless rate higher. One of the things the Fed is going to be talking about, okay? So you drop from 3.6 to 3.5% unemployment. We talked about the earnings. 3.3% month over month. We should get, does anybody know in the den why we get, 1 decimal point? It seems like if this data is uber important, to put it lightly, give me 2 decimal points, man. Give me 2 decimal points, because there could be a huge difference there. That could be 0.3 could be anywhere from 2.6 to 3.4. Okay, and 0.4 could be anywhere from 0.36 to 0.44. And when you're comparing those two numbers and making a difference in terms of them, that's obviously speaks for itself. Yields obviously pulling back a bit. Year-over-year earnings, 4.6, lower than expected. Revisions at play here is what they talk about. The November annual pace was taken down to 4.8 from 5.1. Okay, so that's November when you think about it, right? Even so, the rate of wage gain far from being consistent with 2%. Yeah, way above 2% is what they put it, even without the revisions in there. You have the unemployment rate dropping. There's 2 decimal points for you, right? We get 2 decimal points there. Dropped 0.18% from the month before. And one other take I want to get in here. Let's get in here because this is one that's going to go kind of contrarian to what was happening here. Excuse me while I scroll up. Here's one. Okay. And so this is a take that you better be listening to because I think this one is something that the market's really not paying attention to. And maybe it will on the open. All right. We're giving it up. You got the S&P's up 30 now. We were up 45. Okay. So this is Richard Flynn, not familiar, but managing director at Charles Schwab UK, says investors are likely to interpret as concerning. That's not what's happening just yet, man. Now, this was put out at 8:38, okay? He was fast to the take, but there's a lot of sense in here in terms of if you think that this is how inflation rolls over, folks, I don't know if that's the case, man. Despite, this is his quote, aggressive monetary tightening and lower than expected inflation figures last month, the jobs report indicates the Fed is far from declaring victory and may keep rates higher for longer. As a result, some investors may be concerned that the Fed stance will inadvertently create lasting damage in the form of high unemployment. The labor market is a lagging economic indicator, meaning it can be difficult to judge when the Fed should take its foot off the pedal. I don't know how. You got to get a lot more reports like this while you have inflation cratering for it to be a Goldilocks scenario. That hasn't happened yet, folks. We get inflation at 6 to 7%. Yes, we have wage growth that's 0.3 versus 0.4, but I'm stressing enough, man. This seems like a case yet again. Yes, it's a good data point, okay? Yes, we're still adding jobs at the same time that we have wage growth diminishing. Those are good factors coming out of inflation, but we got so far to go, folks. And if you think we come out of this with unemployment going down, I don't think that's the case. And it's that simple. And we'll see where inflation numbers line up as we go forward. And yeah, we got 3 or 6 months where there are going to be some pretty important data across the board. But yeah, I mean, wage gains is the whole conversation. But I don't know if I just see the ability for the economy really to crush inflation when we have unemployment going down. I just don't see if that's possible, man. 4.6% earnings gain. I mean, think about what we're championing here this morning. And I don't hate to be all doom and gloom, right? But we're going to find out in the open, man. And something tells me that the market's not going to be having a gangbuster day today because I think good data is still bad data in this market. You know, I still think that this is enough good data that it's going to be bad data, as in it's too much good data for the Fed. And I would agree with that last gentleman from Charles Schwab UK because I think you need to see more heartache, unfortunately, folks. You need to see an unemployment rate that's going up to squash this because we're still dealing with employment wage gains of almost 5%. These are the numbers that we need to squash, man, okay? And that's going to be a lagging indicator, and the Fed is not going to move until they're certain. And you got wage gain at almost 5%. You have core CPI at 6%. You have headline CPI at 7%, right? Something like that. They're big numbers across the board. So be careful to get too excited and ahead of yourself in this market. The household survey. So this one was an interesting one. A whole lot of cross currents, as they call it, making it somewhat difficult to read. Okay, as noted, the household survey, which is what generates the unemployment rate, saw a massive jump in employment, 717,000. That's after a decline the previous month. Right? There's a lot going on right now, folks. So is that just catching up to the sustained gains that the payroll survey had shown? Hard to tell. Probably everyone can agree at least that there's nothing recessionary about this report. Yeah, I would agree with that, man. You're adding 223,000 jobs. You got wage gain. Well, you know what? As I say that, you have wage gain year over year of 4.6%. It's funny how the conversation shifts, right? In any other universe, wage gain on a year over year basis of 4.6%, even wage gain on a month over month basis at 0.3%, that's inflationary, okay? There's nothing recessionary about this report because it's so strong. But that's not really what we need right now, folks. And I know that's all the worry, but I don't think this is going to squash inflation. And I've said it enough times, right? Yeah, and that household survey across the board, 3.5% unemployment. Almost Goldilocks for the rate market. Well, like I said, folks, you're dealing with a number month over month that's 0.3%. The estimate was 0.4%. Those are pretty close. And I wouldn't get too excited that we're out of the woods just yet, because we got a long way to go in terms of really seeing a concrete adjustment to inflationary numbers. And we'll see where we go from there. Markets, we're going to be open in about 4 minutes from right now. We got 1 minute left in this segment. Let's jump around, see how we're doing. Let's see how the banks are doing this morning on that news. JP Morgan up a little bit. Everything getting a little bit of a lift this morning except for Tesla. Can't help it. Bank of America, you're going to be up a bit. Let's see. Southwest, they were out. Yeah, Southwest, man. I got a headline up for them. They're going to lose money this quarter. Go figure, folks. Where are they? Southwest sees fourth quarter loss after flight cancellations. How about canceling more than 16,700 flights? Quite a mess, man. They got a downward revision. Not sure what the market was waiting for. Fourth quarter impact of the range of 725 to 825 million, leading to a net loss for the period. Flying capacity in the quarter was likely down about 6% compared with late 2019, 4 points below previous guidance. Yeah, estimated loss of 400 to 425 million, and about 7 to 800 million of that being the holiday disaster. Southwest down about 50 cents today. Markets positive. Stay tuned, folks. We'll come back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
welcome back, folks. We get markets open. You're looking at an S&P up about 28 points following that non-farm payroll jobs number. We'll see where we go from here. It's been a little bit of a drop-off, folks. Those are 15-minute bars. We reached a high in the market at about 8:45, 8:50 this morning. And since then, the last 40 minutes or so, it's been a slow trickle to the open. And we're up by about 30 points to kick things off. Context, though, again, we're just back to where we were yesterday morning, folks. About 9 in the morning, almost really 10 o'clock, right where I was coming off the program 24 hours ago. So keep that in mind when you get a little exuberant over what's going on here. Because as I said, man, that data, it's good data. It's not bad data, but it doesn't get us out of the woods just yet. Let's jump around to Apple. Apple mixed reality headset could be announced as soon as this spring, top analyst says. It's going to be interesting to see how these go out. I've been talking about it. It's amazing. I got that Oculus Rift, it's around here somewhere, Oculus Quest 2 headset a year ago. Got it last Christmas. And boy, it's been quite a demise for Facebook since then, since I become aware of the virtual reality metaverse. You back things up for Meta. From $320 down to $88. You've caught a little bit of a lift up to $128. So Apple's going to get into the field as well. And I've talked about this in the den. And it's something that is going to be present, folks, in the future. It might take over the world at some point, but man, yeah, and that's, how much do you use it? Not that often. That is the good point. It's pretty cool technology if you've never seen it. One of the things that I do think about that really is going to revolutionize things, folks. If you have an Oculus Quest 2, if you haven't checked it out, there's some cool YouTube videos. You can go in there and you can view, I think it's 360-degree 4K is what is some of the cool images out there. And I started realizing what may happen, okay, is that, and it's kind of how the internet kind of exploded, right, is that education was the forefront. Right. I was very fortunate to go to a great school up in Massachusetts, Noble and Greeno, and they were on the forefront of technology. And I remember, number one, using the internet. And at that time, it was universities that had websites and information available online. And then you had the days of AOL Instant Messenger, but it was education. It was universities that first capitalized off of it. And I started thinking about, the technology is so cool on virtual reality that it is something that should be being used for education, period. Man, there's no reason why world history classes, the reason why is capital, okay? It's money, that we don't have enough money right now to have headsets for every single kid in class, okay? But guess what? Some schools are going to. And it is very cool to see that you put a headset on, you're doing a world history class, and boom, you're in the Egyptian pyramids, okay? You're standing in there. Boom, you're standing right next to the Eiffel Tower in Paris, right? It can put you in places. And I started realizing that in education, that may be one of the first areas that you really get into it, because it's going to take a while to adopt that technology, man. It's going to take a while until everybody thinks they need a VR headset. Nonetheless, you got companies coming online, but think about that one, because that's a business plan out for you, man. You want to go buy a 360-degree VR camera, and you know what? I'll pull it up. I don't think I have it right now. I'll find them, because when I first started seeing it, folks, you're going to see them happening a lot more in terms of the videos. That's the other thing that you don't use it for. There's not as much out there yet for those types of headsets. You don't have as much content out there. But watch this. Let's see. VR, 4K, 360 camera. And what do we come up with? Yeah, this one's the one that I've seen a few times when I search for it. And these are the types of cameras right there. So this is from a big retailer. You're talking about $4,600. But you see how these things work, man. They're literally just taking 360-degree images, okay, on your headset in 8K. In 8K, it's about $4,000 to $5,000 camera. But this is where the future's going, man, especially for education. Now, we'll see how Apple's comes out. They're all going to have different settings, okay? But if you haven't tried it, check it out, folks, because when I started doing it, it's pretty cool that you can actually go. One of the things I like doing at first when I got the Oculus Quest is you go into YouTube, and they have specific videos on YouTube for 4K, 360-degree angles. And one of the coolest things I wanted to do is just drop me into different parts of the world, man. Just drop me into Rome, drop me into Paris, drop me into wherever you want to be, right? The Great Wall in China, stuff like that. So think about that when you think about this industry, because there are a lot of areas that it's going to accelerate, and I imagine that's one of them that may happen first. You got, top tier universities, stuff like that. There's no reason why when you're teaching classes like that you can't basically be placed right into them. But Apple, they're going to be joining the mix. Now theirs is going to be mixed reality, okay? And that's where the difference comes in too. Facebook's Oculus Quest is not augmented reality, okay? It's virtual reality. Everything you're seeing in there is virtual reality. It's not a case where you're seeing, goggles, okay, and then they're adding to it, because augmented reality might really be one of the ones that really accelerates things in terms of augmented reality, and that's where Apple is going to be, okay, that they're going to be able to mix reality, as in some of it you're going to be able to see actually what you're seeing in your own office, in your own reality, and then they're going to add things to it. Imagine that, right? So there's a lot you can do there in terms of it. Apple's going to be joining the fray, and that's one of the parts of, you got Facebook being in there. Now, Apple's is expected to cost between $2,000 and $3,000. It's going to have 10 cameras on the exterior and interior of the device. That's according to Bloomberg. It's going to run on their own operating system, XROS. So they're getting into the fray. Facebook's going to have a competitor, but it's going to take a long time to get adopted, folks. And when I think about it big picture, think about how it can come into things on an educational basis, because reaching the masses, it's going to take a while, man, to reach the masses. But there's going to be pockets of virtual reality, augmented reality that will take off. And education, I think, is going to be one of them. Education, corporate training, right? Stuff like that. There are areas that you can really benefit from this technology right now that maybe you don't have to wait for everybody to purchase a headset. It's going to take a while, man, for everybody to purchase a headset. Back to the markets, we're holding up pretty well in the open right now so far. You got the S&Ps up by 35 points. We just spiked to 38.75. Since then, though, we're dropping a little bit. You got the NASDAQ 100 up by 55. Let's see how Apple is trading this morning. Pretty much up with the market, up about 0.8%. We jump over to Microsoft. They've been getting hammered, Microsoft. Look at that. Microsoft can't even catch a bid right now. Google's another one that's gotten hammered recently. They get hammered again. You got Google already negative. So you got Google negative. You got Microsoft negative right now. Amazon's down 1% right now. Be careful today, folks. Let's see how the VIX is trading. Yeah, VIX still off where you were, but you had an elevated level coming into that number. We got to check out Tesla. Tesla making new lows, new recent lows of 101.20. Down another 7% for Tesla shares. Let's see how Cathie Wood is doing. Her shares down another 1.4%. Let's see how Roku shares are trading this morning. Down another 0.5%, man. What happened to the Reprieve? Teladoc, let's see how they're trading. I was checking on them because they're a big one of hers. 2.4% to the downside. She owns some Zoom as well. Zoom up about 0.8%. How's Peloton doing? Speaking of stocks, look at that Peloton catching a bit. Up 3%. Percentages on small numbers can be deceiving, folks, but Peloton up a bit. Interesting. I was on Facebook this morning, early this morning, just scrolling a little bit of Facebook. I ended up in the marketplace, and I saw Peloton used for $600. Said it had been used 10 times. Peloton's got some problems, folks, because there's so many Pelotons out there. Who's going to be buying a brand new Peloton? So that's a good deal, man. I want a Peloton. I'm going to be buying a used Peloton. $600 online. Yeah, Peloton. Up 2.6% today, though. Stay tuned, folks. Markets giving up the gains. NASDAQ 100 only up by 14 points. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Excuse me. And just like that, we get the NASDAQ 100 red. Be careful, folks, in this market, because I think, the market's paying attention to some of the points I was pointing out at the beginning of the program, man. Yes, we have an unemployment rate of 3.5%, but folks, good news is still bad news in this market. We cannot have this strong of a market and pull ourselves out of inflation. I think that's what the market is paying attention to, at least a little bit right now. Growth stocks rolling over, NASDAQ in the red, NASDAQ 100 down 11, and you have the S&Ps barely positive by 12. Let's jump around to some of those FANG stocks. Apple really helping things as well. Apple's still in the positive by 0.5%, but that means everything else is red, man. Microsoft down 0.75 right now. Google down 1% right now. Amazon shares off 1.6% right now. Man, it just don't stop across the board. All right, let's see what else we have going on. Oh, you know what else we got? Yeah, how about WWE? Vince McMahon is back at the WWE. Now, this one's interesting. I think I have this headline pulled up, right? Do I? Let's see. Or maybe it's just the stocks making the moves. Nonetheless, he's coming back to negotiate streaming rights, basically. Let's scroll down. Maybe this is what I was thinking. I was talking about this with friends even this morning. Yeah, World Wrestling Entertainment. McMahon electing himself chairman of the company despite retiring last year due to sexual misconduct. Now, I believe he basically owns the thing and there's one share and he has it or something like that, okay? He elected himself chairman in a bold return. He's used to doing bold things as a character and as himself of that company. He can effectively exercise control over the affairs, the company said. It's a media company mentioned as a potential acquisition target, but what a friend was pointing out, we were chatting about this morning, is that, so this is coming back ahead of negotiating rights, okay? And gears up for negotiations over media rights and strategic alternatives. It's a media company. The only way, as they say, to capitalize on this opportunity is for him to be back as executive chairman. And he might have a point, man. You know, I mean, I don't. There's a lot going on here in this one. But he basically owns that company, even as a public company. He owns it. He has the voting shares for it. He retired last year amid the investigation that they had going on. Okay. Yeah, my dad's texting me on top. So he put his daughter in there. But what is going to be interesting here is that they're coming into this at a time that is not ideal, to say the least, okay? The companies that they are going after right now, they're in some rough shape. They're definitely in rough shape compared to where they were. as in you're coming into companies, right, that potentially the streamers are the ones that are paying for all the rights. And yeah, Netflix is well off their lows, okay? But look where you were a year ago, man. Look where you were all through it, right? They're coming into an atmosphere that's a little bit more difficult to make those negotiations, whether it's Netflix. Not sure Disney's going after the WWE, but nonetheless, Disney at $91.47. Amazon, right, purchasing some football rights. Boy, that's quite a steep decline. And check out this one, man. I had this one on the chart, okay? I guess you might be going there, man. $76. If you take an A to B, C to D on Amazon, you start that A off basically March of last year at about 170. You trade down on the first leg to a price of about 100. That's about a 70-point leg, folks, from A to B, C to D. Now, where do you rise up to? Okay, let's add the Fibonacci to get the Fibonacci number. You come right up to the 618 there. Perfect. I'll get to that in a moment. So you come right up to the 618 in terms of where you are, and then what do? A full A to B, C to D, folks, brings you down to about $76, and it's been a quick ride, and maybe that's where Amazon's heading as we got this market rolling over. And we got a caller. Perfect. We got Mike from Ormond Beach calling. Mike, good morning. Thanks for calling, man. How's it going?
Tommy, I'm doing great. Hey, I sent you an email yesterday. I don't know if you got it, but I'm on Indeed job search. And I have one category of delivery driver, and there's so many jobs here in the Daytona Beach area. In fact, I sent screenshots of it to show you, just like in the last 3 days.
I didn't see it, Mike, but I was super busy the last couple of days with some stuff, and I still got to go through a few emails, and I'll track it down, man. I will. Thank you for sending it. So when you're saying there's so many jobs open, Mike, is that what's going on right there?
Yeah, there's a lot of hiring going on here in this area. And again, it's the Daytona Beach, Florida area. And that's just one category. I put in for delivery driver. And anyway, you'll see it when you go through your emails.
I'll pull it up. I'll try and even find it at the next break. So tell us though, Mike, is this who is hiring? Like, who's putting those jobs out there? Is it mostly the big companies? Is it who is hiring? Who's looking for those jobs?
Okay, up until last right in between Christmas and New Year's, there were still ads for 3 Amazon subcontractors that were still looking for delivery drivers, but I don't see that there now. But like I said, I just typed in one category, delivery driver, and a lot of it is maybe, I guess you would call like mid-sized businesses in the area.
Sure. Hey, it goes with the jobs report we just got, right? Unemployment going down, actually, even as the labor force participation rate rose. Right. And it's especially probably interesting in that sector in terms of, it seems like as time goes, everything we're doing is getting shipped online to some degree. I still like going shopping in stores for sure. But that's one of those pockets of interesting coming off the holidays, though, because you wouldn't think that maybe. You'd think maybe that the push is there during the holidays. They pull back a bit. But and then you have, of course, South Florida. And we're fortunate to live in Florida, I think, just with people, we had no state taxes, right? We have people coming to beautiful Florida. So we're very fortunate to be in Florida as we have people coming here versus actually leaving, as they have in some of the states in the Northeast and so forth. But I appreciate it, man. It's good feedback. It goes with the jobs number we're getting,
something else, too, in this Daytona Beach area, there are so many apartment complexes still being built. It's unbelievable. Every vacant piece of land that used to be like cattle pastures and just vacant with trees, like 4 years ago, now it's all leveled off, and they're building these huge apartment complexes. It's amazing.
It is, man. And we're dealing with some similar stuff. I'm near, not Central Florida, but near Lakeland. And we're not getting apartment complexes, but we're getting the single-family houses from, D.H. Horton, Lennar. And I've told the story, man. We had a beautiful cow field next to us, and now we got a development, Mike, that's about 1,400 houses going up, man. And it's amazing that they're selling them because we're walking through the neighborhood. It's kind of cool when the neighborhood's getting built. The roads get built first, so you're able to kind of walk through the neighborhood when nothing's built, but they got nice roads, they got nice sidewalks, they have all the infrastructure built. You see the houses going up. And just as quick as they're going up, man, they got people in those houses right now, which is remarkable. With rates where they are, right? We're saying, how are they going to sell 1,400? But guess what, man? They're going, they're selling them. So it's happening. And yeah, being in Florida, very fortunate. Not surprising to hear it's happening. But I appreciate the feedback, man. Jobs. I'll try and find that email that you sent me as well, Mike, and I'll check it out. So I appreciate
it yesterday.
that, man,
and
as
something
always.
else, too, over the holidays, I introduced a bunch of friends to TFN. And if you get time today or Monday, maybe you could go over your intermediate term projections for the S&P again.
I will. Tell you what, I'll kick it off on Monday. How's that? Because we only got one more segment.
That's great.
But I'll do a segment kind of talking about some of those bigger, longer term deals, because it's still only January 6th, man. We got a long way to go this year. So I will, and thank you for spreading the word, man, because I'm so lucky to do what I do, to talk to you in the morning, man, to do this show, and we couldn't do it without you, man. So I appreciate it.
All right. Thank you, Tommy. Bye.
Thank Mike. Have a good one, man. Folks, always give us a call. 877-927-6648. Great feedback from Mike. We got one more segment, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got some volatility in both directions going on. Your S&Ps, we spiked to about 38.75 on the open. You drove down all the way to 38.30. You're talking about basically getting flat on the S&Ps, and just like that, we're back to positive territory. It's going to be a wild one, I expect, folks. We jump to commodities, crude trading at 74.15. You get the gold contract trading at 18.49. We jump over to currencies. Dollar index, excuse me. You accelerate below 105, we're back to about 105.22. When we check in on notes and bonds right now, pretty muted action in terms of where we were yesterday. You're up by 6 ticks, but you're just back to where you were towards the close of action yesterday on the 10-year right now at 113.06. We jump over to the volatility index. A little bit of a spike, but nothing compared to where we were coming into that non-farm payroll number with the VIX sitting at about 22. And you know what else we don't talk about enough, man, is what's going on with Congress right now. And it's quite a spectacle. Reality TV shows, folks, they resume at noon. Seems like there were more concessions made from McCarthy trying to get in there. And what I will say, folks, and this doesn't have to do with either party, okay? I'm sure Democrats could see this happen as well. Compromise is lost, and compromise is government, okay? And so you're seeing it play out with Republicans right now. Similar things could happen with Democrats, okay? You got 20 Republicans holding up the speakership. I'm not sure how that's going to play out. And, boy, they seem to be getting a lot for what they're doing, okay? But compromise is how government gets done, folks. And there's less and less compromise over and over and over from both parties. And, you know, the middle is where things really are supposed to get done, and everybody is entrenched on both sides. So there is nothing getting done for the next 2 years. The market probably likes that, okay? Because there's nothing getting done in Congress no matter what, and then to have a Republican House with a Democratic president, that's not even close, let alone even things coming out of this Congress, even if they had a Republican president. So nothing's getting done for 2 years. Market will probably be fine with that. And they resume voting at noon Eastern time. But compromise, it's not a bad thing, folks, okay? Because the middle is where most of the country actually is. So remember that one. Stay tuned, folks. It's going to be an interesting day in the markets. Thanks for starting your trading day off with me. Thanks to our man Mike for calling in. And yeah, we'll talk to you on Monday, folks. Stay tuned. We got our man Basil Chapman up next. Live programming all day. Markets back in the green. Have a great Friday, everybody.